Some economists are also pushing back against President John Mahama's assertion in his 2026 State of the Nation address that Ghana's economy has decisively rebounded. They argue that while headline macroeconomic indicators may suggest stabilization, easing inflation, relative currency stability, and fiscal consolidation, the so-called recovery remains largely statistical and not structural. In their view, the gains reflected in GDP growth projections and primary balance improvements have yet to translate into tangible welfare gains for households and small businesses. Put simply, the macro story may be improving, but the microeconomic reality on the streets tells a different story. High cost of living, constrained disposable incomes, and persistent unemployment pressures. And this afternoon, we've been speaking to some economists on what they make of President John Mahama's State of the Nation address. And joining me in studio right now is Dr. Kwesi Nyame Befi. He's a lecturer and economist at GIMPA. Doc, grateful for your time this afternoon. You're an economist, so you can speak on a wide range of issues. Now we're having 3.3 inflation in the month of February. What do you make of that?
I think, to begin with, thanks for having me, and greetings to all your listeners. Indeed, this morning, I actually saw some publications from the Ghana Statistical Service saying that inflation has dropped further, I think from 3.8% to 3.3%. But I think that what we should actually be asking ourselves now is that, is the further drop in inflation actually telling us what is also happening with regards to the cost of living? Because the reason why many people will be so focused on the inflation figures or the inflation numbers is really to find out if indeed now the cost of living is actually going down and they can do more things than they could previously. And if you ask of the, the lived experiences of the average Ghanaian on the streets, I mean, with regards to utility prices and the cost of goods and items, I think there's a bit of a disconnect between the inflation figures that are going down and actually lived cost of living experience of Ghanaians.
But to be fair, though, something like food inflation has come down. We've seen a couple of other things also come down. Not long ago, we heard automobile dealers saying that they are reducing their prices by 15%. So while you say that a couple of things have gone up, some have also come down.
Indeed, and I think that's what makes the whole conversation on the policy choices of government even much more interesting, in the sense that when we are talking about goods and items that have gone down, are we only focusing on the imported items? So, for example, when you talk about vehicle costs that have come down, obviously, if the cedi appreciates, that means that the amount of cedis that ordinarily you would need to purchase or to import a vehicle, you will need less of, the cedis to do the import because the cedi has gained much strength. But as an economist, what my focus really on is whether this is actually sustainable and whether this has a long-term impact in terms of economic transformation on our economy. Because if we have the cedi appreciating and imported goods and items actually coming down, but when it comes to the actual production or the real sectors of the economy that we need to drive long-term economic transformation and create the jobs that we need for the youth, then in that case, it seems we are, based on the policy choices of government, we are actually creating a situation where government or Ghana is becoming more dependent on imports rather than the actual economic transformation of production and exports that we need to drive the economic change and create the jobs that we need.
Right, let's talk about the State of the Nation address, which was delivered by the president last week. I mean, he touched on a number of issues, but he also spoke heavily on the economy. He says that Ghana's economy, in a nutshell, is on a right trajectory. You are amongst one of the or some of the economists who are disputing that. Why?
So I don't dispute the fact that indeed, I mean, based on the SONA and even data from Ministry of Finance, Bank of Ghana, etc., that looking at some of the main macroeconomic indicators, such as public to debt, GDP ratio, the GDP growth, inflation figures, as you've just said. Indeed, you see that there is stability within our economy. But what I think the State of the Nation address failed to address is that when you listen to His Excellency the President actually do create an impression that the economy that he inherited was so bad, and that in less than, or in 1 year, the economy has been able to turn around, and now based on certain policies that they are going to put in place, that is going to drive the long-term economic transformation that we need. And that is where I actually dispute, these facts. Because
is that not a fact, though?
That is not a fact, because if you actually take time, to even examine the President's State of the Nation address, paragraph by paragraph, you take, for example, the GDP growth rate, for example. Indeed, 2024, Ghana recorded a GDP growth rate of 5.7%, coming from the post-COVID era of 2020, where our growth rate was 0.5%. So you can see that the economy had actually turned around before 2025. We take even inflation from even when you take the President's State of the Nation address, where inflation peaked at somewhere around 54%, but all the way down to less than 25% as at December 2024. Same with, the public debt to GDP ratio. So you can see that the economy had actually turned the corner when it comes to us coming from, high inflation rates, low GDP growth, among others. So that means that...
Had it turned the corner, or it was turning the corner?
So I would say that it was turning the corner. So meaning that the economy that was inherited by this government or by the president was not an economy that was so bad as the president seems to, say in his State of the Nation address. And indeed, if we look at the State of the Nation address, where the president says, 2022, for example, was one of the darkest, economic moments within our history. But you ask yourself that indeed, in 2022, that's when Ghana couldn't, pay its debt. We had to request for the domestic debt exchange program, the policy and programs that came into place. But the question that we should be asking ourselves is that if an event occurs in a specific year, does that mean that that event was produced within that year? Or it could be a accumulation of events that had happened prior to that. So if we take, for example, our debt, our debt situation in 2022, where Ghana had, a debt in terms of our public debt stock, I think was somewhere around 53.9 billion. But you look at 2008, where our debt stock was at $8 billion. Fast forward to 2016, where our debt stock was around, I think, $29.2 billion. I'm talking about dollar term. So from 2009 to 2016, our debt stock increased by 262%. Whilst from 2017 till that 2022, where the president actually says that it was one of our darkest, economic moments, our debt stock had increased in percentage terms by about 85%, meaning that the event that did occur in that specific year, if we ignore, the external factors and, other issues that contributed to us getting to where we were at that time, you can see that indeed the high or the unsustainable debt levels we experienced at that time also was not just partly, but it was very much contributed also during the NDC-1, NDC-2, so from 2009 to 2016 era. So if there's an issue in 2022, I mean, we can't say that it was due to just recklessness, mismanagement, etc. But it was issues that had started or had been contributed to from the NDC government all the way down to the MPP government. But where we need to actually also focus on is that when our debt levels were unsustainable, what actually did happen? The president, in his State of the Nation address, actually mentions that one of the reasons why our public debt to GDP has reduced quite significantly to about 45% is as a result of fiscal consolidation, negotiations and bilateral agreements. But I mean, we should ask ourselves that in terms of these debt negotiations and agreements, I mean, when did these actually begin, or when did they actually start? You and I are aware that right at the time, we started with this domestic debt exchange program, the IMF program and the debt negotiations started prior to 2025. And one of the main reasons why, some researchers even say that the MPP lost, the reason why they lost power was as a result of these painful programs and policies, such as the domestic debt exchange program. So in a way, this government is also enjoying the fruits of that painful decision that was taken by the previous government. So, which I believe that the State of the Nation address should have also highlighted that and also emphasized on that, and also credit, the previous government of some of the, gains that we've recorded in terms of our reduction in the debt to GDP ratio, in terms of reduction inflation, among others.
You spoke of DDEP. Now, a government can issue domestic bonds, as we all are aware. Is that to say that that should also be attributable to the previous administration, per what you're saying?
I mean, if the fiscal space had not been created in the first place, we wouldn't get to the point where, our public debt to GDP ratio, goes down quite significantly. For us to get to the point where we are now saying that we are ready to actually go and borrow from the domestic market. But obviously, I think one thing also that needs to be made clear, that of course, even though, policies and programs were put in place under the previous government, this government had also continued on with it and had also put in place certain measures, such as, some of the expenditure rationalization measures that have also helped us to get to where we are. And I think that has to be made clear. But on Ghana getting ready, to go back on the domestic bond market to borrow, I think it's something that I would say that government needs to tread cautiously. Because indeed, now we have the fiscal space. Our debt to GDP ratio has come down quite significantly. But if you look at, that's why I said sometimes you also have to examine, not only look at the macro level, but also come down to the micro level and look at the numbers. If we take, for example, our revenue target for 2025, when the Finance Minister, Dr. Atufo, read the 2025 budget, the target it had set, the minister had set for Ghana for the first quarter to the third quarter, we were unable to meet that target. Actually, we missed the target by as much as 7.7 billion Ghana cedis. 7.7 billion Ghana cedis, which is very massive. So meaning that we are finding it difficult to meet our revenue targets. Again, if we look at our debt numbers, from May 2025 all the way to November last year, so November 2025, our debt stock has actually been increasing. Our debt stock had increased by more than 30 billion from May 2025 to November 2025. As a matter of fact, even if you look at May to September, our debt stock had increased by 70 billion. So now the question is, if indeed our debt stock is going up and we are unable to meet our revenue targets, I mean, why are we so much in a rush to go to the domestic bond market and borrow? Is it that we just want to be able to finance some of the fanciful promises of the government or what? Or are we trying to, fund key projects that will bring long-term economic transformation.
You're talking about an increment in our debt stock between May to September.
May to
November as well.
Yes.
Where are you getting these figures from?
So these figures are from the Bank of Ghana. You can look at the Bank of Ghana summary statistics data.
Okay.
So from May to September, our debt stock increased. And then from September to November, it went down slightly. But if you look at the entire period of May 2025 to November 2025, I didn't include the December 2025 because the data wasn't available. You can see that there has been a net increase in our nominal debt figures.
How would you rate John Mahama's first year in office when it comes to the economy?
That's a difficult question. I think I will rate the president's first term in office probably at maybe 50%.
50%?
Yes,
Why?
I'll raise it. Because, I mean, I would have wished that I would see clear policies that are going to drive the economic transformation that we are all looking out for.
You're not seeing them enough?
I mean, if I asked you that, tell me some of the key policies and programs that have brought these economic transformation, I'm sure you'll find it difficult. I mean, apart from the Forex intervention by the Bank of Ghana, which initially the governor of the central bank had said, mentioned that it wasn't true. But later on, after the IMF released their reports, etc., came out to say that indeed, the central bank was intervening in the forex market. I mean, if we take some of their key flagship policies and programs that they said they were going to put in place to create the jobs needed, reduce our import dependence and all that, I haven't seen it yet. If you take the 24-hour economic policy, for example, I was expecting that by now we would have seen clear signs with regards to, for example, probably lower utility, rates and prices for businesses. But I haven't, apart from the fact that the 24-hour policy bill has, the president has signed that and passed, and the president has signed it. I mean, 110 million allocation for the 24-hour economy is very inadequate. I mean, if the coordinator for the 24-hour economic secretariat is saying we need almost about $4 billion to successfully implement the 24-hour economy policy, which if we use an exchange rate of about 12 Ghana cedis, we are looking at close to about 48 billion Ghana cedis, and you allocate 110 million Ghana cedis,
right,
which is less than 1% of what you actually need to successfully implement your flagship policy and program, then, my brother, there's a problem. It's a problem because the youth need jobs.
Right. I mean, you've mentioned that some of the challenges that we confronted, especially in 2022, were years, an accumulation of years of bad decisions that we took. Now you are grading President Mahama 50%.
Yes.
I mean, inflation is down from over 20% to under 4%. The dollar is hovering around 10 to 11%. Still, you are grading him 50%. I want to find out from you, in the 2024 elections, the main contender of President Mahama was Mahmoud Bawumia. Do you think that if he were to be the one in charge right now, things would have been different, better, or worse, you'd say?
So I think, first of all, you talk about these macro numbers. That's why I was saying we need to look beyond the macro numbers. So in terms of jobs, what policies and programs have been put in place to create the jobs? Their flagship policy, 24-hour economy, hasn't really taken off. And as I said, the allocation to that program or policy is hopefully inadequate. If we talk about the economic transformation, making sure that our industries are expanding, manufacturing sector expanding, etc. You look at that as well, and you see that the government is so much focused on these gold exports, bringing in the forex we need in order to then intervene in the market to bring the dollar, bring the strength of the dollar down. Now, with regards to the question you just asked me regarding the former vice president, I mean, as at last year, even when the Bank of Ghana had a program abroad, I think in London, one of the key policies and programs they actually praised for, helping us boost our reserves and bring, help our economy was the Gold for Reserves program. And the Gold for Reserves program, I mean, if you look at the records, can be attributed to His Excellency, the former Vice President, Dr. Mahama. So I think that if these policies and programs that are currently in place, and that has helped, boost our reserves. So if you look at our gold reserves, before the domestic gold purchase program, our gold reserves were somewhere around 8.7 tons. As of December 2024, our gold reserve had actually increased to 30.5 tons. I mean, this is a very major policy or program that has boosted our reserves quite significantly.
That means that the foundation, according to what you're saying, the foundation was set in motion for this to happen.
Yes, as a matter of fact.
Does that mean that Mahmoud Bawumia would have also gotten 50% from you then?
So he's not president yet, but yes, even in his absence, if his policies and programs are driving this change, this economic transformation that we are seeing, then I mean, as president and with all the constitutional powers, etc., would even do, I would say that would even do more.
So he would have performed better.
Yeah, he would have performed. Yeah, he would have performed better than the 50%.
How many percent
would
you say?
And as a matter of fact, if you look at the current policy that was launched, I think this year, no, it hasn't been launched yet, the National Reserve Accelerated Accumulation Policy,
right,
which is more or less a rebranding of the domestic gold purchase program for reserves. I mean, you will notice that the ideas that the former vice president actually put in place are ideas that have actually helped our economy, ideas that have helped with the structural transformation of our economy.
You failed to put a number to it. I don't know why.
No, because you can't put a number to it, but I know that he would have definitely performed better.
More than
probably
50%.
More than 70%.
More than 70%?
Yes, more than 70%. Because I would do those analysis based on his track record as vice president.
Right. Dr. Kwesi Nyame-Befi, I want to thank you very much for your time this afternoon. He's an economist and a lecturer at GIMPA. You're still watching The Pulse here on JoyNews. Return from the break with more. Don't go anywhere.